nightly business report.
Good evening. Tonight, industry participants have enthusiastically embraced Sri Lanka's recent drop in electricity tariffs, believing the action will spur expansion and increase export prospects. Following the recent relaxation of Sri Lanka's import prohibition, Hambantota International Port has declared that it is ready to manage the expected rise in vehicle imports. On the first trading day of the week, the market saw a downward trend with the ASPI declining after previous week's advances. The S&P SL20 exhibited a comparable decline. And Trump's tariffs on China, Canada and Mexico stand to disrupt global markets by threatening economic expansion and rekindling inflation.
From Studio 24, here's Anuradhi Vikramasinghe.
A very good evening and thank you for joining us. Sri Lanka's recent electricity tariff reduction has been warmly welcomed by industry stakeholders who are optimistic that the move will drive growth and boost export potential. The reduction is expected to lower production costs, benefiting both consumers and industries.
Sri Lanka's recent electricity tariff reduction is expected to benefit various sectors, with domestic users seeing an average decrease of 20%. Low-usage households will see a largest reduction over 25%, while hotels and industries will experience cuts of 31% and 30% respectively. Public sector rates will drop by 12% and street lamps and state institutions will receive an 11% reduction. Minister of Industry and Entrepreneurship Development Sunil Hadunhethi noted that high electricity costs have long impacted industries, especially small and medium-sized enterprises. He highlighted that the tariff cut could boost revenues by up to 30% from many industries. Hadunhethi added that the apparel and food manufacturing industries would be the largest beneficiaries, enhancing Sri Lanka's export potential. Overall, the reduction aims to lower production cost, benefiting both industries and consumers.
The government is focusing on 6 key sectors: hospitality, logistics, renewable energy, technology, agriculture and apparel, and textiles to attract foreign direct investments instead of relying solely on incentives. The government aims to create a creative and conducive environment for investment. Board of Investment Chairman Arjuna Herath emphasized this approach during a panel discussion at the Sri Lanka Economic Summit. Herath identified the hospitality sector as a low-hanging fruit for attracting investments and highlighted the promotion of public-private partnerships. The Sri Lanka Tourism Development Authority recently called for tenders to develop 3,000 acres of land for projects like restaurants, hotels and entertainment facilities. The BOI will provide concessions for investments above a certain threshold and assist SLTDA in packaging these development projects to attract investors. Hambantota International Port has announced that it is fully prepared to handle the anticipated increase in vehicle imports following the recent lifting of Sri Lanka's import ban. Hambantota International Port is fully prepared to support the expected surge in vehicle imports following the recent lifting of Sri Lanka's import ban. With the local automotive market on the rise, HIP is poised to play a crucial role in meeting the growing demand, backed by its advanced infrastructure and experienced workforce. Wilson Koo, the CEO of HIPG, highlighted that HIP's roll-on, roll-off volumes have grown significantly from 238,997 units in 2018 to 579,362 units in 2024. This growth reflects the port's increased capacity to handle large volumes of vehicle imports, solidifying its position as a key hub in Sri Lanka's automotive supply chain. To streamline the vehicle import process, HIB has established several specialized facilities, including dedicated customs inspection bay. Vehicles undergo thorough physical checks in a new 24/7 facility, ensuring compliance with local standards. Additionally, HIP's vehicle processing stations and secure storage areas provide a smooth and efficient experience for importers throughout the clearance process. The Sri Lanka Logistics and Freight Forwarders Association has expressed concern over ongoing congestion at the Colombo port, which has been affecting the nation's logistics industry and international trade. The congestion has persisted for several weeks, damaging perceptions both regionally and globally. And in response to this issue, the SLFFA has engaged in discussions with His Excellency the President and the Ministry of Highways, Ports and Aviation, submitting proposals to address the crisis. SLFFA emphasizes the need for improvement improvement in operational processes, advocating for the adoption of digital solutions and a coordinated single-window system. These changes are essential to improve efficiency, reduce delays, and enhance transparency. By embracing technology and process improvements, SLFFA believes Sri Lanka can overcome current challenges and strengthen its logistics infrastructure for the future. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The market experienced a downward trend on the first trading day of the week, with the ASPI following a decline after last week's gains. The S&P SL20 also showed a similar downward movement. For further insights on this, we speak with Manusha Kandanarachi from First Capital Holdings.
Thank you. The Colombo stock market started the week pivoting positive sentiment of the previous week, with the all-share price index experienced a mixed trading session. Almost every sector experiences a price downturn across the board. HNB Bank, LOIC Finance, Browns Investments, Bukit Dara and NDB Bank emerged as the top negative contributors to the index. Accordingly, all-share price index closed the day in red at 16,956, losing 166 points. On a positive note, selected apparel and construction sector counters attracted the investor sentiment interest throughout the trading day. Specifically, decreased participation from both retail and high net worth investors was also observed compared to the previous sessions as well. Amidst lack of crossings, turnover of the day reached to LKR 3 billion, reflecting a decline from monthly average of LKR 7.1 billion as well. In terms of sector contributions to the turnover, capital goods sector led the turnover with 26%, followed by the food, beverage and tobacco and banking sectors, which jointly contributed 29% of the overall turnover.
The market began the week with a loss following last week's positive performance in the ASPI and S&P SL20. While there was downward momentum on the first trading day, the market's direction for the remainder of the week remains uncertain. For further insights, we speak with Dimantha Matthews from First Capital Holdings.
Thank you. The market has been a bit slow over the last few weeks, in line with what we anticipated. So, however, despite the slowdown, we are not seeing a huge decline in the market because of the buying interest that is there. So, going forward, also what we expect is the market to be a bit slow because of the selling pressure that is there in the overall market. However, the results are starting to come out for the December quarter, and the results that have already come out seems to be pretty strong, and in line with that, we expect renewed buying interest to come on selected counters. So we've already seen that gradually coming in, and however, we think it will accelerate over the next couple of weeks, and with it, we feel that the market may gradually start moving up again. So until then, we believe that the turnover levels may be slightly slower, with activity levels also sort of at medium level. Thank you.
Gold prices dropped from record highs today, pressured by a sharp rise in the dollar following U.S. President Donald Trump's announcement of trade tariffs on China, Canada and Mexico. Spot gold fell 0.7% to $2,780.56 an ounce, while April gold futures dropped 0.8% to $2,810.30 an ounce. Last week, spot prices had reached a record high of $2,817.57 an ounce. Despite today's declines, the drop is expected to be short-lived, as gold had seen a strong surge due to a global equity market rout and rising safe haven demand ahead of the tariffs. Meanwhile, the dollar surged to a near one-month high, approaching an over two-year peak following the tariff announcement. Oil prices surged today following U.S. President Donald Trump's imposition of tariffs on Canada, Mexico and China, raising concerns over potential crude supply disruptions from two of the U.S.'s largest suppliers. Brent crude futures rose by 0.96%, reaching $76.40 a barrel after peaking at $77.34 a barrel. Meanwhile, U.S. West Texas Intermediate crude futures increased by 1.88%, settling at $73.89 a barrel, after touching $75.18 a barrel earlier in the session. Trump's Saturday announcement of sweeping tariffs on goods from Mexico, Canada and China has sparked fears of a trade war, which could slow global growth and fuel inflation. However, the prospect of reduced fuel demand has capped further price gains. The Sri Lankan rupee has weakened against the US dollar today, showing a noticeable decline compared to last week. According to the Central Bank of Sri Lanka, both the buying and selling rates of the US dollar have risen. Let's now take a closer look at how the Sri Lankan rupee is performing against other major global currencies. A short break now. This is the Nightly Business Report. Welcome back. TVS Lanka announced yesterday that it is continuing to redefine Sri Lanka's two-wheeler industry by locally manufacturing a full range of motorcycles, scooters and mopeds with significant domestic value addition.
As Sri Lanka faces a critical economic phase, TVS Lanka's focus on domestic value addition is playing a crucial role in revitalizing the economy by providing cost-effective and sustainable mobility solutions. Since launching its state-of-the-art vehicle assembly facility in 2021, TVS Lanka has enhanced its domestic manufacturing capabilities with an investment exceeding ₹500 million. The facility employs managers and technicians trained in India, ensuring global expertise in local production. This initiative is in line with the Ministry of Industry's Domestic Value Addition Program, setting new standards in quality and innovation. TVS Lanka CEO Geethal Anthony emphasized that the effort is timely in managing rupee depreciation as is dedicated to developing the component manufacturing industry in the country. The company has created a full ecosystem of component manufacturers who have received overseas training and now hold OE status. TVS Lanka's operations also generate employment opportunities for local youth and skilled professionals, benefiting SMEs across the supply chain.
Sampath Bank has strengthened its position as a leading financial institution by entering into a strategic partnership with Union Assurance, a top bank assurance service provider. This collaboration will integrate Union Assurance's life insurance solutions into Sampath Bank's extensive product portfolio, offering customers a seamless combination of banking and insurance services, and will leverage Sampath Bank's broad branch network and digital capabilities to make Union Assurance's offerings easily accessible together. The two institutions aim to provide customers with convenient, all-encompassing solutions that ensure both financial security and long-term well-being. Sampath Bank and Union Assurance, both deeply ingrained in Sri Lanka's financial landscape for nearly 4 decades, bring extensive experience and customer-centric innovation to the partnership. This collaboration marks a significant step in delivering comprehensive financial and protection solutions to the Sri Lankan consumers. Alumex plc, a leading aluminium manufacturer, recently launched its new state-of-the-art urban range of products in partnership with Capral, Australia's renowned aluminium extruder.
Alumex plc unveiled its latest product line featuring the Urban Plus range, including sliding windows, casement windows, sliding doors, double hung windows and hinged doors. The launch event, attended by architects, builders, fabricators and dealers, showcased the collaboration between Alumex and Capral, Australia's leading aluminium extruder. Alumex Managing Director Pramukh Dedivela described the partnership as a game changer for the country's aluminium industry. He emphasized that by combining Capral's global innovation with Alumex's local manufacturing expertise, The new products meet international standards while addressing the specific needs of the Sri Lankan market. The Urban Plus range is designed to offer sleek aesthetics, superior durability, and energy efficiency, making it ideal for architects, builders, and homeowners. Additionally, Capral's team will conduct training sessions at the Alumex Training Center to equip the Sri Lanka's fabricators with the skills to work with these advanced systems. The training is expected to elevate craftsmanship and enhance industry standards across the country.
In a significant move for Sri Lanka's logistics sector, UTE has supplied ACE Distripacks Private Limited with 5 state-of-the-art CAT electric forklifts, enhancing the efficiency and sustainability of its 100,000 square foot warehouse. After a thorough evaluation, ACE Distripacks selected these forklifts for their eco-friendly features and efficient warehouse operations. This partnership is expected to set a new benchmark in the logistics and transportation industry, promoting the adoption of green technologies. The handover ceremony highlighted the shared commitment to environmental responsibility between UTE and ACE Distripacks, with key leaders from both organizations in attendance. CAT electric forklifts are designed for high performance in demanding indoor and outdoor environments, offering impressive lift power and low operating costs. This collaboration marks a significant step forward in promoting sustainability within Sri Lanka's logistics industry. Intrepid Travel has selected Colombo, Sri Lanka as the host city for its Global Summit 2025, marking the second time the event will be held outside its Melbourne headquarters.
Intrepid Travel has chosen Colombo to host its Global Summit 2025, recognizing the country as a key operational hub for the company. Since establishing an office in Colombo in 2012, Intrepid has grown significantly, with the city now managing trips across the island and supporting various functions such as technology, HR, finance, and customer service. The local team, with 276 office-based staff and 45 local tour leaders, has contributed to the destination's strong performance, making Sri Lanka the perfect choice for the prestigious event. Scheduled on the 24th of February to the 27th of February this year, the summit will bring together over 200 international participants from 50 countries, including Intrepid's board, co-founders, and co-management team. The 4-day summit will feature strategy sessions, leadership workshops, community engagements, and familiarization trips to highlight the company's global impact. The event aligns with Intrepid's commitment to fostering a strong, inclusive company culture and strengthen its teams across the globe. Sri Lanka's selection as the host city also reflects the company's recognition, having been named Best Destination Loyal Partner at the Sri Lankan National Tourism Awards 2024.
Union Bank has reached a significant milestone with the launch of the National Entrepreneurship Development Program at the Union Bank School of Social Entrepreneurship. This initiative, the first of its kind, was launched in collaboration with the University of Moratuwa and the National Innovation Agency. Applications were called in December of last year, and 200 students, current business owners, and aspiring entrepreneurs with innovative startup ideas were selected to enroll in the program. The program combines online lectures and workshops, offering a comprehensive course designed to enhance business acumen. This milestone marks the start of a transformative journey to upskill both business owners and budding entrepreneurs. Union Bank also invited its customers to share their inspiring entrepreneurial experiences, adding significant value to the program. Let's take a short commercial break now. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stock markets took a hit today, with European and US equity futures sharply lower after President Donald Trump's tariffs on Canada, Mexico and China sparked fears of a broader trade war and potential global growth slowdown. The US dollar soared to a record high against the Chinese yuan in offshore trading, its strongest against Canada's currency since 2003 and its highest against the Mexican peso since 2022. Japan's Nikkei fell 2.9%, while Australia's benchmark, often seen as a proxy for Chinese markets, dropped 1.8%. Stocks in Hong Kong, which include Chinese company listings, saw a 1.1% decline following the Lunar New Year holidays. Mainland Chinese markets will resume trading on Wednesday. Pan-European Stocks 500 futures fell 2.7% and US S&P futures fell 2%, reflecting widespread market concerns. Global markets are in for a shake-up after Trump imposed tariffs on Canada, Mexico and China, risking economic growth and reigniting inflation.
Global markets are set for a fresh jolt on Monday after U.S. President Donald Trump launched a trade war with sweeping tariffs on Canada, Mexico and China. Trump's 25% levy on goods from Canada and Mexico, along with a 10% tariff on China, could lead to financial turbulence. The potential to drive up consumer prices is a particularly sensitive area for investors, who are worried about a revival in inflation causing the Federal Reserve to stop cutting interest rates. Market analysts say they expect sizable moves in currencies, with JP Morgan predicting Friday that the Mexican peso could drop more than 10%. Analysts also expect some kind of sell-off in stocks and other higher-risk assets. Barclays strategists previously estimated the tariffs could create a 2.8% drag on S&P 500 company earnings, including the projected fallout from retaliatory measures from the targeted countries. Though Goldman Sachs said on Sunday it believes the tariffs on Mexico and Canada will be short-lived. American companies reporting quarterly earnings this week, like Ford Motor, will likely face a barrage of questions about the impact of the new policy. Automakers are expected to be particularly hard hit through tariffs on vehicles assembled in Canada and Mexico. Their vast regional supply chain, where components can cross borders several times before final assembly, would further exacerbate these costs.
European stock markets are a sea of red in early trading after Donald Trump rattled investors by signing off tariffs last weekend.
Donald Trump's move to hit Canada, Mexico and China with tariffs sparked a stock market slump on Monday morning. That as investors around the world brace for retaliation by those countries and fear a spreading global trade war. Japan's Nikkei index fell over 2% in early trade Monday. There were similar declines for benchmark indexes in South Korea and Australia, while markets in mainland China remained shut for the Lunar New Year holidays. Big exporters including car makers were among the worst hit on fears of further tariffs. Honda and Mazda both fell around 7% in early trade. Taiwan tech giant Foxconn, which has a plant in Mexico, plunged 8%. Economists have widely warned that the tariffs, which take effect on Tuesday, will cool global growth and spark inflation in the US. Over the weekend, Trump said Americans might feel some pain from the trade war, but he has also insisted any problems will be short-lived. Now all eyes turn to what further measures Trump might impose and how the targeted countries react. Canada has already promised retaliatory tariffs. The fate of the UK looked less certain, with the president indicating that tariffs on the country might be avoided.
But that's all from us here, the Nightly Business Report for today. We'll see you again on Wednesday with the latest updates across the business globe. Until then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a good night.